Today's 360 round will focus on the semiconductor stocks. And joining us is Kim Forrest, founder and chief investment officer at Boca Capital Partners, and Kyle Clark, investment advisor rep at Gerber Kawasaki Wealth and Investment Management. Kim, I'm going to go to you first. With growth and technology names leading to the downside in this overall market, should investors start to pivot back to these names if you're looking at it from a long-term aspect? I know it's probably going to be volatile over the next few months for a lot of investors in this space as everything gets reset, but are there opportunities in some of these names?
I think there are fantastic opportunities in many, if not most, of the names that are in the semiconductor area. And here's why. I have my entire career, first as a software engineer, then as an equity analyst, and now as a PM, I've focused on companies that provide and use technology to make themselves more productive. And the only way that they're going to be able to implement whatever technology they want, it's through semiconductors. It really is that simple. So I think these things are for the long haul. I always look 3 to 5 years out, but I understand a lot of people watching this are more of a 6 to 12 month sort of trader. But that being said, I think that a lot of these names are incredibly misunderstood. And, you know, you can buy a little bit of them here and there to make yourself feel better about the volatility of the price.
Yeah, dollar cost averaging might be the way to go here on these. If you look at this, Kyle, in this particular sector, we've got the Philly Semiconductor Index down 31%, the SMH down 30% on the year. A lot of these names have been beaten up. Now, some of that is some, valuation-based downtrends that we're seeing, and then the consumer spending habits here. What's your outlook for this particular space in the semi names? Because maybe there's going to be winners and losers in this space, right?
Definitely. And I think overall, you hit the nail on the head with the market in the semiconductor space has been down 35% because of inflation, because of the conflict with Russia and Ukraine. And it's generated a lot of fear within the overall market with a slowdown, right? With rising interest rate environment to combat that inflation. So we're seeing lower guidance in earnings. Analysts are working through a lot of those earnings revisions. And we've seen that PE compression of about 40% off of the all-time highs to start at the beginning of the year. So I do feel that obviously, with this correction that we've been seeing, presents a tremendous opportunity for investors within certain names of the space, specifically with your top premium names like Nvidia and AMD.
Yeah, definitely. Nvidia has underperformed the most of the names in this space, but it outperformed for a couple years before that. But Kim, when I look at this and, maybe the changing consumer a little bit, and I've been trading and following these names like AMD and Micron for years in this space, and it seems like they always get it wrong based on demand cycles, right? And we're going through one of those demand cycles that's diminishing a little bit. They weren't prepared for it. A lot of outliers there on that front. But when you look and hold names, which ones besides maybe AMD and Micron are you looking at?
Sure. So this might nauseate you, but I'm going to go there, right?
Yeah.
I'm going to say Intel. And I think it's because they are, a provider of fab services. And I'm really excited about them expanding their footprint, not only in America, but I'm sure that they will be expanding their foundries around the world. This whole COVID thing, I think, has gotten pretty much anybody in technology saying, let's not, get into any one geographic area. So it's going to be expensive for a little while, but I think ultimately you're going to have a really great company that knows how to deliver product economically at a profit for its shareholders.
Intel, that's a big call there, Kim, as a lot of the analyst community are kind of pushing back on this. If we see that slowdown in the number of chips needed, now we didn't have enough of them throughout the latter stages of the pandemic, throughout 2021, and it's odd to me how that switches and pivots so quickly in this space, and it has done historically. But Kyle, when you look at that name like Nvidia that you mentioned earlier, you know, the silos of revenue generation and the opportunity and the innovation that they create. They're a leader in this space. Tell me why you like Nvidia and what are the outlooks here?
Yeah, 100%. Nvidia is a premium name within the semiconductor space. They have a long-term, wonderful growth story built into their data centers. And that's not even including the crypto segments and the video game segments of their business. They're also coming into a near-term product cycle, and they're increasing inventory with trying to meet that demand for their chips. Plus, they're also coming out with their next generation graphic cards. So I think overall, in the short term, there may be fears of slowdown, which is understandable and a natural part of business cycles. But you know, the semiconductors are seeing earnings that are really going to be attractive when we look over the long term relative to a PE to growth ratio. So I think in the short term, we're going to see, you know, some choppiness over the next 6 to 12 months. But we have to remember, NVIDIA is the king of this. You know, we want to think about data as the new gold, right? Mm-hmm. And semiconductors are the picks and shovels of that gold rush. And that's where the money's made. So we want to think about these companies in this space in a multi-year period, because when we look at semiconductor revenue, it's expected to be worldwide about $660 billion this year, which is a 13.5% growth rate year over year, following a strong 2021. And NVIDIA is primed to be in that leader within that space.
Yeah, definitely that total addressable market, massive in this particular space. But Kim, real quick here, when you look at this, and we haven't seen a lot of revisions and estimates revisions for a lot of these semiconductor names, do you expect that to come to fruition as we get into earnings season in a couple weeks?
I'm a wild-eyed optimist. I'm going to say no, because I think there's a hidden increase in semiconductor use. And I believe that finally Internet of Things is coming to fruition, even as the telcos build out their 5G networks. That's kind of the thing that Internet of Things, which is essentially a whole bunch of machines out there gathering data in real world processes like pipelines or roads or, you know, just a myriad of uses where people and businesses would like to track mobile business, mobile units, whatever. I think that that is something that's going to drive the use of semiconductors. And then just things like, I don't know, look at how many semis are in cars now. Right. So consumer goods, even things, and I give an eye roll to this, refrigerators. Like, who really wants your refrigerator to tell you you need milk? Apparently more people than me, because I don't. I know when I need milk. But like, I'm just grasping at things that I think people want a more connected world, and semiconductors connect us.
Yeah, my range hood has one now. Go figure. Kim Forrest, Boca Capital Partners, thank you very much. And Kyle Clark, investment advisor at Gerber Kawasaki.